rather hear me and see my screen, please?
Yes, sir. Yeah.
All right. Thank you very much once again. And I'm really delighted and privileged to be a part of this talk today and presenting to you an opportunity which most of you know perhaps as to what's happening around us in terms of the digital India movement. But I don't know how many of you are visualizing your business in the coming future with the advent of technology as the core solution to the business problems of MSMEs. So hi, my name is Riaz and I'm founder, promoter of 𝐷𝐸𝐴 Fintech India Private Limited. I've been having experiences of sales and distribution of over 30 years, and 20 years I've been into leadership positions in the BSFI space. And 𝐷𝐸𝐴 has been a company founded in 2017. We launched our business in 2018, and we've been incubated under Bharat Inclusion Initiative. And we are a part of Inclusive 50 Fintechs Worldwide. Inclusive 50 Fintech Worldwide is basically powered by Center for Financial Inclusion, which is based out of Washington, supported by Axion, the largest impact fund in the world, Visa, MetLife Foundation, and other like-minded large international institutions. And they identify 50 companies every year across the world which are making difference in terms of financial inclusion with technology as a solution. And we were identified last year among 4 companies from India. We were one among the 4 companies from India which were identified. So what I present to you is basically, how things are going to be spanning out in terms of the financial infrastructure in this country in the coming 10 years. Just a little about Bharat Inclusion Initiative. Bharat Inclusion Initiative is a program, it's an incubator center, incubation program of 𝐼𝐸.𝐸, which is basically an entrepreneurial center, incubation center of IIM Ahmedabad. And I would like to introduce you to a reality that what we see as the digital India is basically a conception of few very smart thinkers based out of Bangalore, and it is called 𝐼𝐸𝐴 Foundation. 𝐼𝐸𝐴 Foundation is basically a voluntary organization of top executives from the IT world who actually come from US and Europe after working for companies like Google, Amazon, Microsoft, etc., etc. Mr. Nandan Nilekani is also closely associated with them, and they are the ones who are charting out the digital journey of the of India and the public financial infrastructure which is being created. So before I just jump into my discussions with you in terms of what's going to be happening in India, I would like to take you through a journey that most of us would have actually experienced. So, the roadmap of digitalization of India, I still remember way back in 90s, RBI used to physically clear the checks. Today, in terms of the digitization transaction in India, almost 40% of the transactions in India are digitalized, and close to about 3 trillion transactions happened in 2021, in which close to 35 billion digital transactions happen in India, which is expected to increase to 214 billion by 2026. A 6x increase in the digitization of India. The journey of this is something that I experienced myself personally. There used to be a time in 90s when, in-station check used to take 3 days for clearing and outstation check used to take 21 days for clearing. There came Citibank, which actually experimented with a courier service, and I was working in that courier service, and we used to carry checks from Bombay to Delhi, from Delhi to Madras, and so on and so forth, and get the checks cleared locally, and the money used to be given within 2 days to the corporate customers of Citibank. Imagine, had Government of India not launched RTGS and NEFT, what would have happened? Wouldn't we been controlled by the foreign bankers, which happens in most of the countries? In 2004 and 2005, the Government of India launched RTGS and NEFT, and this is what brought the first level of digitalization to the corporates. Can you work in an environment where you get your money after 21 days? In today's context is a question that I ask you, and most of you will say no. Of course, when an economy grows, the efficiency of traveling of the money also has to increase. And in 2008, electronic clearing was launched. In 2009, finally government understood that if they don't have their own financial switch, and if they continue to depend on Master and Visa for a financial switch is nothing but an independent party which is basically doing transactions between different banks and the outlets where the payments are being collected from. It's a very complicated financial infrastructure which India did not have till 2009. And that is when NPCI commenced operations. NPCI is a conglomerate of banks and banks, which actually is a public sector company, and they hold the entire payment infrastructure of the India. And then they launched RuPay in competition with Master and Visa. In 2010, we started experiencing IMPS, which is instant money payment transfer. In 2016 came UPI and Bharat Bill Pay system, a competition to Paytm, PhonePe of the world. And rest is history. UPI has changed the B2C landscape of the digital payments in India, making India the largest digital payment platform in the world. And 2.5x more transactions happen through digitally in India as compared to China. So this, ladies and gentlemen, is one of the biggest achievement that has been delivered by a small group of IT, IT experts on a voluntary basis based out of Bangalore, and it's called 𝐼𝐸 Foundation. I know the architect of UPI. His name is Sanjay Jain. He heads the Bharat Inclusion Fund initiative. And I have worked very closely with him in building my business model. And hence I know the inside story of what is going to be happening next. And in 2022, Bharat Bill Pay system, if you are aware about Bharat Bill Pay system, it's basically a billers platform wherein all of you can make your payments to any kind of billers. In 2022, Bharat Bill Pay will be launching B2B payments, and that should be happening in the next 2 months or so, and which will be competition to all the payment gateways. So here lies the opportunity for you business people to actually become a biller on the NPCI platform and get your payments and your bills received from anywhere from India, anytime, 100% reconciled in your bank account at a fraction of a cost of what you end up paying to the payment gateways. So this is the story of NPCI, of the movement which is called digital payments in India. Now, when we were building this technology about 5 to 8 years back, India Stack at a core level, they have a vision of creating open networks. The idea behind open network is to establish level playing field for all members of digital ecosystem. For example, in China, nobody can compete Alibaba and the WhatsApp equivalent of the company over there. People can't compete with them at all. They completely control the Chinese economy, 2 or 3 companies. But with India Stack and an open digital ecosystem, it's a kind of a level playing field where innovation, creativities are given a free rein, so that application developer can focus on building the best consumer experience and products instead of having to worry about infrastructure, permissions, access. So the first offering of India Stack is the identity offering. Aadhaar, DigiLocker, e-sign. You can e-sign any of your documents and be rest assured it is applicable. It will be taken in as a legal document in all the courts in India. You actually don't need to sign on a physical paper. DigiLocker is basically a locker in which you can keep as many documents that you would want to have to keep. Payments, like we were talking about, in terms of payment, you have NPCI with UPI, IMPS, NASH. AEPS, that is Aadhaar enabled payment system. Anyone can go to any counter, put his thumbprint and take cash from that counter, RuPay and Bharat bill pay system. This is the payment stack of the India stack. Then there is data, and the most powerful offering that is already started, which is called Sehmati and account aggregation. What does account aggregator do? Account aggregator basically is an NBFC licensed by RBI, and they actually collect your financial data from all the financial institutions as mandated by the regulator, and then they share that data digitally with your consent with all the financial services provider. So that is to say that with one consent, I can have a look in all your bank accounts for transactions dated to the extent that you want me to see. And this is one of the most powerful financial infrastructure offering that has been released in the market in the recent past anywhere in the world. And then we're talking about open networks. Now, what are these open networks? Open credit enabled network. That is to say that all credit offerings, which will actually happen through what we call flow-based lending. That is to say, lending basis the flows of your data, not lending basis the income documentation submitted by you. So the future of India, which will show a Ken-Bearian growth, is flow-based lending. And in flow-based lending with open credit enabled network, there will be standard protocols of underwriting. Housing loans will be underwritten in a standard protocol. Education loans would be underwritten under standard protocols. MSME loans will be written under standard protocols. Working capital limits would be written under standard protocol. Standard protocol means plug and play. You can take your plug anywhere in the country and you can put it into you can put that plug into a system and the light comes on. Similarly, with the open credit network, there will be standard underwriting protocol for all kind of financial services product through the open credit network. Even insurance, wealth management, all those kind of services would be available. And that product has already been launched, and it is still in the very initial inception stage. I'm sure most of you would be hearing about ONDC, Open Network Digital Open Network Digital Commerce. Open Network of Digital Commerce is basically one singular e-commerce platform. So imagine what NPCI did to Master and Visa as far as payments were concerned. ONDC will do it to Amazon and Flipkart. And all merchants across the country can onboard this network and take the advantage of the digitization and digital India and introduce their stores to the e-commerce world without paying hefty commissions and charges to the incumbent e-commerce players. And then you have the digital health network. So very soon, the digital health network will enable all digital health records to be maintained in one place, and all service providers, insurance companies, everybody participating through it, so that there is complete transparency on healthcare, and the treatment to the poorest of poor is available free, and to a person who is very rich, he is not stripped off by the by the hospital systems. So this is what India Stack's all about, and this is how India Stack will unleash identity, payment, data, and the capabilities for developer companies like us to unleash different kind of product solution. Technology for inclusion. So this is what the use cases are, the cash transactions, lending, financial inclusion, social safety net. In fact, Today, the direct benefit transfer in India is the biggest program across the world. World Bank has actually acknowledged that India has done a fabulous work in the direct benefit payment transfer system. But do you know that India copied this model from Venezuela? Today, 98% of rural direct benefit transfer that are subsidies and 68% of the urban subsidies go directly into the bank account of the beneficiary. We are talking about implementation of wealth management programs, insurance, and different kind of new business services that I talked to you, e-commerce, etc. That is all going to be happening because of this identity layer, payment layer, and data layer, which is being created with public APIs. Now, what are APIs? APIs are basically interface between different systems to be talking to each other seamlessly in milliseconds. Now, GSTN in India is, according to me, the most powerful financial infrastructure ever created. But in America, in the Southern America, way back in 2000s, e-invoicing was becoming a norm. We are talking about in India in 2022, 2020 and 2021-22, when e-invoicing is getting implemented. In Southern America, e-invoices got implemented way back in 2000, 2003, 2004, 2005. Today, in the Southern American countries, every kind of invoice, whether it is a B2B invoice, a B2C invoice, or a B2G invoice, are compulsorily and mandatorily being issued through e-invoicing system. Now, what's actually happened because of that over the last 10 years over there is that e-invoice by itself has become a very major asset category, and there are banks which only do invoice financing or invoice discounting. The only role of the bank over there is to do this particular business. The economies over there have actually compounded their business efficiency because of e-invoice. Now, what's an e-invoice? Most of you are introduced to the concept of e-invoice. It's an iron. It's a code which is generated from the GSTN system, and that QR code is printed on an invoice. And before you dispatch your material, you need to ensure that there is this QR code of an e-invoice. It carries some basic information about the invoice, and it has got its unique signature and a unique identity. You cannot duplicate an e-invoice. Now, you would be surprised to see this data in terms of the number of GSTNs in the country. Over 500 crore turnover, and this is basically B2B data. So let me just kind of, put a caution to it. So this data, this is basically basis B2B. But even if I include B2C billing, which is not done by corporates too much, there will not be too much of a difference. There are less than 10,000 companies in India which do more than 500 crore. Ladies and gentlemen, do you think a country like India can afford to grow its economy into the next 25 years by depending upon 10,000 companies? I don't think so. And you will all agree to me that the business opportunity lies in this segment, the segment of MSMEs, which actually generate the employment in India, which is the second largest employment generator in India after agriculture. And today, e-invoicing is making it possible for all of you and to a lot of MSMEs in India to be able to access funds towards their invoice in almost real time. 5% of taxpayers generate e-invoice but pay 95% of the taxes. The firms up to 1 crore will be mandated to issue e-invoices from 31st March 2023. Very soon, next financial year, even firms below 1 crore will be asked to generate e-invoice on a voluntary basis. What will happen with that is that solutions of offerings on open network will be given. And I'm just going to give you one example as to how you can actually deliver a digital lending product like digital payments. Mr. Nandan Lilikali recently mentioned that digital lending will be as quick as payments. And he is very true. With data as a collateral and e-invoicing as e-invoice as security and anchor. So let's say a very large MSME, which has a network of dealers around it, want to create more liquidity in their system, can give the data to the fintechs. The fintechs do a GST analysis. So large sellers with greater than 10 crore turnover present their GST for analysis. With the analysis through the fintech, the data is read, and within 10 minutes, the GST analysis is complete. Credit limits are offered to the dealers of the anchor. The dealers then are asked by the anchor to onboard the platform and complete their KYC through DigiLocker or CKYC, do their business KYC via GSTN and location verification. And this is over real-time basis. It can be done while you are doing your CKYC and business KYC. We already have picked up your PAN card number from the GSTN number, and a credit bureau check has been completed. Within 20 minutes, the fintech sends the file to NBFC. A prospect is created and a soft approval is given. Then the fintech sends a request to the NBFC to do an account aggregator check on the cash flows of that firm with different bank accounts, with the consent of the customer, and basis certain rules that are there in the system. A working capital limit is assigned. In 30 minutes, the dealer does an e-sign on the limit. He sets up an e-NASH, an automated collection process. He scans the invoice for payment, and voila, within 30 minutes, the payment comes into supplier's account. This, ladies and gentlemen, can happen today. It's real. And ExtraCap FinTech is actually leading this revolution in flow-based lending, and we are the pioneers of invoice financing in this country. Last slide, in terms of how mobile first works, a little about our model. We have brands. Brands have, they work with distributors and small manufacturers, retailers, traders, sellers, then buyers. We offer a receivable management solution and liquidity management solution. And it's an e-invoice driven platform wherein working capital between 1 lakh to 50 lakhs is given to replace the trade credit. Bharat Bill Pay system, B2B services for billing solutions for large anchors and distributors, so that reconciled money can come into their account. And in case the dealer does not have enough money to pay their bills, he can use the credit limit to pay their bills. At the buyer end, we can give UPI payments and buy now, pay later kind of solutions. At the supplier's brand end, we can give retail consumption data basis all the invoice that we collect. And we are actually creating a receivable management solution to multi-branded distributors and medium-sized manufacturers who are traditional by nature, with bridge to capital embedded as a working capital credit solution to the MSME buyers to fund their liquidity gap, with data as a collateral and the e-invoice as a security. Thank you very much. I hope I have not shot past my time.
No, sir. I think you were very, very quick and a lot of information for us to process. But it looks like a brilliant platform, created by some of the very sharp and bright minds of India, and feels really amazing, opportunity. So we'll open it up for the audience. I have a few questions, but then yes, let's ask them. Yeah, guys, you can start to ask the question. So Ayushi, maybe you can.
We can start with Partha. Yes, please.
Yeah.
Yeah, good morning. It was, in fact, an eye-opening session and a very detailed information. Of course, we are working with some companies like Lending Cart and all, where the disbursement has really taken place in much faster time. I wouldn't say in 30 minutes or 1 day or something like that. It happens in 2 to 3 days, as you rightly said. And as I am agri-tech startup, Millet Mart Ventures is looking for some invoice financing with respect to farmers. they'll be sending it in various mandis. We are working very closely with companies like Nagarjuna Fertilizers, who are again working with ENAM. You might be aware of that. We are definitely interested to tie up with extra cap and then take it further from here. So I'll be interested to discuss with you one to one and take it. So please let us know how it can be done.
Yes, sir. So I'm sure Ayushi will be able to share my contact details with you, and I'm on email. And let me tell you something, that there is a lot of focus by the Department of Financial Services, Reserve Bank of India, and the Prime Minister's office to increase the supply chain finance in the agri-tech space. Agri-tech space still faces some challenge with terms of, genuine data collection, and because the agri products are not on the GSTN system, there is no formal way of collecting the data. However, however, we can actually encourage the farmers to actually start collecting their money digitally, improving the performance of their bank account through improving their collections and their disbursements of whatever they do. Instead of cash, they get into the digital economy, and agri-tech like yours will go a long way in helping the farmers to do that. Of course, there are different solutions available on channel financing on agri-tech, and I'll be happy to share it with you on a one-to-one basis.
Yeah. We are typically looking for something like escrow account or something like that, where we'll be able to discount the bills which has been sold to the trader or buyer who are registered with GST, and everything happens digitally through a blockchain or a token passing methodology. So we'll definitely love to discuss with you offline and then take it further. And
Sure.
Thank you for the wonderful session, and thank you, Ayushi, connecting me on time and then getting me into the beautiful BANC network.
Thank you so much. Thanks for asking. Yes, Paras, please.
Yeah, hi, Mr. Riaz. It was a wonderful session. All information in one deck, quite insightful. Two questions. One is if you can throw light, what's happening around a digital rupee, which RBI is planning to come up, the kind of impact and what will happen in that situation, and what are horizontal and verticals around it. Second is, are you can we reach out to you? Are you associated with NBFCs, etc., for bill discounting purposes, or how?
Okay, so yes, I'll take your second question first. We work with NBFCs. We are hoping that the banks also start seeing the light in the invoice financing business space, especially for smaller ticket size invoices. Invoice financing is done by banks between large corporates and big distributors, but the tier 2 financing between small retailers and distributors is yet to take off. We work with a few of the India's largest NBFCs. We work with India Infoline Finance. We work with Adani Capital. We work with 𝐷 Capital. So we've got 4 NBFCs lined up with us, from where we give working capital limit between 1 lakh to 50 lakhs. We are basically financer agnostic. It does not matter to me which financer wants to take my platform, till the time the financer understands the merit of data flow based lending and is willing to build its risk algorithm according to the flow lendings. And increasingly more and more NBFCs like Tata Capital and others are wanting to participate in this space. In terms of the digital rupee, India would be among the first countries after Singapore, I think so, to be talking about a digital rupee and launching a digital rupee. Digital rupee is nothing going to be, it's basically, the physical rupee taking shape of a digital money. The only underlining importance for a digital rupee would be the use of bank accounts. Now, what digital rupee is going to be doing is that it is actually going to make increasingly impossible after 10 years for black money to be circulating in the economy. And it is basically an alternate for the current blockchain currencies which are circulating in the market. And digital rupee will actually have a sovereign guarantee in it, and it would be cheaper to produce digital rupee vis-a-vis the physical rupee. So there is going to be not much of a difference between both of them, except that digital rupee will actually increase the pace of digitization and the formalization of informal economies in the country, and increasingly, make people come onto the GSTN system. So you would have to see it very holistically. On one side you have e-invoicing. So increasingly more and more businesses will have to get onto the e-invoicing track. And once you are in e-invoicing track, you cannot escape from the tax infrastructure of the country. On the other side, you have cash exchanging being done for invoice purchase. If that is converted again into digital rupee, which is currently, digital rupee would be a kind of a form of to be very simplistic, it would be like a UPI, in the sense that it is basically instant transfer of a demand or a supply from one place to another digitally. So you want 200 rupees from me, and I want to give that 200 rupees to you. I can actually use a digital money, or I can also use my bank account to do the transfer. So as to how exactly the digital money will take shape in the country is yet not disclosed by Reserve Bank of India. But I think it is going to be very revolutionary. It is actually digital money, e-invoicing, and the entire India stack infrastructure will take the Indian economy to the 10 trillion level in the coming
or it could be they may stop, let's say, a higher denomination currency like 2000 rupee note, etc., and they ask you to transact in digitally.
Sir, absolutely. So once a digital money comes in, actually there is no need for a denomination at all. The concept of denomination is going to be getting over. You can have a digital money for 1 rupee, you can have digital money for 23 rupees, you can have for 230 rupees, you can even have for 1,45,000 rupees.
Right.
So with the digital money coming in, the concept of denomination is going to get over. But that's basically long-term by nature. Right now, the government would have to give a digital money solution which is palatable to the public. Public still needs to trust that digital money to transact in digital. See, technology is all about trust. It has taken close to about 6 years for UPI to be trusted by small merchants. Today, whether it is an auto rickshaw wala, whether it is your car cleaner, whether it is your maid servant, all of them, house help, all of them are collecting money through UPI. But 5 years back, none of them ever thought that they could collect digitally. So it's about building trust, and it takes time. Even if it's a government program, it takes time.
Right. So I'll reach out to you for
Sure, sir.
Thank you.
Okay, yes, Pankaj, please.
Thank you, Mr. Riaz, and it was very, very insightful sessions. I think definitely there are so many takeaways for me specifically, what I would say, because I come from the same background, and I know Bristow Capital since 2018 as when I was chief risk officer for a company called 𝐷𝐢𝐴. So they were also part of Bharat Inclusion Fund, and I heard so much good about you from directly from Sandeep and his team, and MicroSave was also consulting us. So, and currently also in the same space, running this fintech company called Capital Setu, where we are also catering to a different space, but on the similar lines, what you suggest. And there are so many things which I can learn from you, and definitely look for some of the synergies, in the deeper space for SMB segment. So would love to get in touch with you separately on one-on-one session, and would love to have your perspective on the things.
Thanks, Pankaj. Always willing to help. And I think one of the biggest learning that I got from the 𝐼spirit Foundation is basically the voluntary service. And that's the core and the spirit of BANCable.
Right.
Also, you can only gain more by giving. If you give more, you will get more. And I believe in that philosophy. And I'm more than happy and to help anyone to understand how things can be done in a better manner. I don't believe in the concept of competition. I believe in the concept of collaboration. I believe in the concept of coexistence, and I believe in the concept of sharing. And the more you
Right.
share, the more is beneficial to the industry and to the final
Right.
customers.
Right. And one more thing, which I wanted to appreciate specifically about Bridge to Capital, that Bridge to Capital or this extra cap fintech touched the supply chain financing area at that time when very limited people was thinking about it, because though it is a public platform, but I would be honestly speaking about India's growth story, that I'll not be doubting if India will be, crossing the super duper economies maybe in the time span of 5 to 8 years. I'll not be amazed, honestly. And supply chain financing is going to be the biggest contributor, rather, I would say. And for me, term loan kind of products going to be obsolete, though it is a very big statement which I am making, but I am having very definitive opinion on this.
Pankaj, you are not at all wrong when you say term loan product will become obsolete. Term loan product has a certain use, and that is basically use case for term loans is that you basically, if you're not very sure about your future, your immediate income and your immediate flows, then you mortgage your future profits to basically take a term loan and improve your business. Now, however, majority of the businessmen, small business people in the country, they actually require working capital. They require money at that particular point in time at a certain of a certain amount and for a short period of time. They want money to improve their business cycles. Now, term loan, typically you give a 1 lakh rupee term loan, and that term loan is for 24 months. Now, what is the guarantee that that money which is received by you is going to be used for business? In the proprietary space of MSME, there is no guarantee around it. Absolutely. If you give a 1 lakh rupee working capital, and if that customer rotates that 1 lakh rupee in 24 months for at least 10 times also, then he actually does a turnover of 10 crores. And if he's making a profit of 10%, then he's making a straight away profit of 1 lakh rupees, which is almost equal to the principal that he's taken. Now, there is no guarantee in a term loan that he will be able to make that kind of a money, because he would be tempted to buy a mobile phone, or he might be able tempted to buy a sari for his wife, or pay for the tuition fee of his education, children's education, or pay for a medical emergency. So the whole concept around flow-based lending stems from the reality that there is something called business entity concept. There is a difference between your capital and the profits of the business. The capital belongs to business, profits belong to you. But most of the MSMEs don't understand this. 90% of them think the money is theirs and they can use it the way they want to use it. And that is where most of the small businesses fail. Flow-based lending, digital lending, invoice financing, Digi Rupee that has just been spoken about, all of this will enable the serious small business players to be able to build a sustainable long-term business model.
True. Absolutely correct, sir. Absolutely, because supply chain financing is not only the liquidity provider, but it is actually creating a positive impact on the overall business ecosystem by eliminating collection efforts and provide a platform for 100% end-use monitoring. So that is the beauty which this system is adding by increasing buying power of the customer. So absolutely beautiful it is.
I can guarantee you guys that after 1 year, if one of you guys are using my platform on receivable management, wherein the receivable is being collected through Bharat Bill Pay system, and in case the money is not available, a credit line is available to your buyer, I promise you after 1 year, you don't have to worry about your cash flows at all. Your liquidity position will be so strong and your cash flows and reconciled accounts will be so solid that you can actually spend time thinking of growing your business.
I think that's one of the big pain areas of all the SMBs, managing their working capital, and largely they are stuck because, they don't have enough funds. They can't deploy the funds, pay, 60 days, 90 days, 120 days credit, and, the entire funding tap dries down, and they are always under immense pressure. So if this problem can be solved, nothing like that. It brings in all the efficiencies, and the size of the economy, size of the businesses are going to grow, and the size of the economy is going to grow. So, sir, I wanted to ask you this question now. How does the entire process work? So let's say for example, we have a lot of SMBs, and they are doing businesses, let's say from 50 lakh turnover to, let's say 5,000 CR kind of turnover. So how does the entire process work? So let's say if they have to approach
It's
you.
so how it works is that it is 100% digital and it is 100% remote. They need to download our application called 𝐷𝐥𝐥𝐥𝐸 and get their GST analysis done. And there are no charges for it. Right now, a free service, because we want to build more trust on it. While there is a charge to access the GST and data and to analyze it, which is to be given to the service providers who are allowed to do it. But we do it, we give it for free, we pay it from our pocket. And then we do an entire GST analysis. The GST analysis actually runs into sometime even 100 pages. It will actually be able to analyze your entire data for last 12 months in terms of what kind of sales you've done, for what kind of B2B invoices, to which all parties. And it would be, then your data will be structured and presented back to you. And you will be told that the following dealers of yours who buy regularly from you will be able to get a working capital limit, which we call an offer limit. We give an offer limit. Now that offer limit is visible in the application, the person will see, if let's say if his 100 dealers are qualified, he can browse through the mobile app and he can see that APC got 10 lakhs, XYZ got 5 lakhs, etc., etc., etc. That is basis the past data of 12 months flow that we give an offer. Then the dealer is contacted by the anchor and is asked to download BridgeToCap. Now, this is what is very unique. When an anchor asks you to do something, a buyer to do something, there is a trust factor already established between the anchor and the dealer. If I go and ask the dealer to do it, the dealer will not listen to me so very easily because he doesn't know me. But the moment an anchor tells him कि भैया तुम BridgeToCap app को download कर दो और आपको कुछ working capital limit मिल जाएगी अपने business को बढ़ाने के लिए. Then the dealer downloads the BridgeToCap application. Right now, the process is not like what I showed to you. This is what we are wanting to do, giving money in 30 minutes. While I can kind of execute it in next 1 month, I don't still have the like-minded lenders who will believe in the speed of the process. Lenders want more underwriting. And people think time is underwriting. According to me, data is underwriting.
Right.
Now, if you were to underwrite a person within 1 minute, people will think that this guy might default. But if you take to underwrite a person over 10 days, then people say, oh, all due diligence has been done. Unfortunately, that's how the mindset of the bankers are. However, once the underwritten is complete through BridgeToCap application, which is remotely done, you have to give your Aadhaar card, PAN card, address proof, etc., complete all KYCs of RBI, give bank statement, give access to your GST and private key through which I am able to read the dealer's GST and data. Once that is done, a soft approval is taken from the NBFC and the customer signs an ENASH form. He then completes an e-sign and a working capital limit anywhere between 1 lakh to 50 lakhs is given.
So that working capital limit is assigned to, let's say, the dealer.
So one, it is limited at a program level. So you might say at a program level, we do it 5 crores or 10 crores. And then it is limited at a dealer level, depending upon the dealer's ability to absorb that cash in his business. So there are two factors which are important that we see: his past turnover and his average daily bank balance. Now, for example, if he has to pay 1 lakh rupee of repayment, bullet repayment after 45 days, for example, does his bank balance have enough flows to be able to do it or? So we would see at least if his daily bank balance should be at least 40% of the bullet payment that he needs to be making. So that at least 2 days of the transactions, if he holds, then on the third day, the ENASH will get clear automatically from the account. We've actually put these rules, and I can tell you my first bounce rate, which is to say the moment you present the ENASH in the MSME industry, the first bounce rate is 40%. In our platform, first bounce rate. That is to say, first time when you present in a term loan, when you present an ENASH, the possibility of that bouncing in the first time is 40%.
Okay.
After 1 or 2 presentations, the money comes in. In our case, our first bounce rate is only 5%.
Oh, wonderful.
So basically, because
Even less
the
than
way
that.
we have delivered the product.
Okay.